Well, team, the market bulls got sparked out today, and this is coming at a time when most investors are just beginning to become comfortable with the market rally. For this video, we're going to take a look at the price action in the market, and we're also going to dive into a few stocks that are holding up much better than the rest of the pack. I already scanned through about 300 tickers today, and we filtered out the cream of the crop. So without further ado, let's dive in. The market's been rallying for about 2 months, right? The market bottomed out on October 13th, and we really just had a 2-month zipper. Now, what's so interesting about market psychology is that most humans, we are riddled by recency bias, meaning whatever events just happened in the recent past, we extrapolate those events out into the future. I notice this happen all the time with trading. When the market has a huge plunge lower like it did in the fall, you'll start to see a lot of financial media headlines that say, could the market have a 20% drop right after a 20% drop? I would say right now we got to the exact opposite scenario where the market had a Santa Claus rally. Just because the market doesn't literally rally up to Christmas does not mean that it's not like a winter or Santa Claus rally. We got a plus 17% move in the S&P 500, and I just started to see a lot of commentary that was like, could there be a market rally? And it's just usually too little too late. And I think that's what we are encountering now, where as people are starting to get bullish, that's where I'm noticing institutions are stepping in and they're selling into the rally. For our box scores, the S&P 500 finished down 1.8%. Our NASDAQ was down 1.68%. The small caps got hit very hard, down 2.75%. The ARK Innovation Fund just got absolutely whacked. There were some headlines earlier in the day about Tesla potentially cutting back their production in China. That headline came out, then maybe 15 minutes later, another headline came out saying, hey, just kidding, that wasn't real, but investors really just took down the stock. Our long bond ETF also got hit, and volatility pumped up across the board. We finished out the session with up volume of only 7.1%, and the trend model flipped to a -1. Now, there's a big difference between a healthy pullback or a healthy consolidation and just high volume institutional selling. And I believe we got the latter for today's session. Remember back here, November 10th, we got that huge rally, and then we got maybe like 5 to 10 days of sideways action. These candles right here, you could say, these are a little pullbacks, right? There's not much going on, lighter volume than the green up days, and maybe some stocks, they hit overbought conditions and they're just kind of consolidating or moving down a little bit. There's a little bit of profit taking. But for all the profit takers, there's buyers that are stepping in and lifting those offers. The past couple days have been quite a bit different. Ever since we got stuck in this range for the S&P 500, we had a false breakout right here at the end of November. And it looked like we were going to move to the upside, and then boom, the market just got knocked right down. And it looked like things could potentially get a little bit wobbly. Then we got the PCE data, and we got this huge extended range green candle, and now we're making a shot at this teal downward trend line. Well, over the past couple days, you'll notice that we really reacted off of that downward trend line, and it's occurring on high relative volume. And today, the action in a lot of individual stocks was just pretty violent. So I do think that given how extended the market rally is, it is important to be prudent here, because we know that there are sellers that are present. For my process, we know that the trend model flipped, and we can't see the future. So how do we know that the sellers are done? The sellers could easily just reappear tomorrow, and it's not really up to us to make that prediction of like, oh yeah, buyers are going to come back in and whatever. At this point, we're just in the short term selling off. We are below this weekly point of control for the S&P 500. Definitely a level to watch for tomorrow is this 40.19.75. For our sectors, we had this MSOS cannabis ETF move to the upside, and we had regional banks really just fall apart. So let's take a look at those charts. The MSOS cannabis ETF has moved on high relative volume for the past 3 trading sessions on the news that potentially the Biden administration could be doing something on the legalization of cannabis. It's tough to tell if this really is a true move or if it's really just something that's occurring at the end of a bull run in the stock market. One of the worst performing groups today was this KRE Regional Banks ETF. The regional banks and really just the banking sector as a whole were doing pretty good when we had rising interest rates. And now today, this is just an absolute bludgeoning. This is not like, oh, just a friendly pullback, right? Just some profit taking here. This is like, huge selling, again, on high relative volume. The best performing sector for today was K-Web, the China internet names, and even these, most of them gapped significantly higher in the pre-market, and we just got a big old red candle. These names are super extended. I appear on Twitter Spaces with a lot of like punting day traders, and I see a lot of them talking about like, oh yeah, I'm getting long Chinese stocks now. Meanwhile, we entered these Chinese stocks on this consolidation. We already pieced out of these for like a 3R or 4R return, and these names are just so incredibly overbought. I can't imagine, being like, all right, this gap higher, like now let's go all in on China. You're just so overextended from all the key moving averages. So it's kind of crazy. If we look at some of the individual names, and remember, we've been covering these in our videos. We traded these actively. Futu, we got to pull back to the 5-day EMA. Definitely a name to keep on the radar. Pinduoduo, which is one of the ones that we traded. This one also took out this VPOC up here and closed off the lows, which is pretty good. We actually had a green finish. So there's definitely money going into China. That is definitely a theme to keep on your radar. The NASDAQ broke back inside of this monthly value area. This really is not what we want to see. This is not screaming Santa Claus rally. This is not screaming risk on. The NASDAQ made lows in October. We barely had a rally off the lows, and here we are. We're already rolling over. We do have this monthly point of control at 11,751.5. That is definitely the next level of support to keep on the radar. Our Russell 2000. Look at this one as well. We broke back inside of our monthly value area. We took out the monthly point of control, and we closed below the 200-day simple moving average as well as the 20-day simple moving average. Again, this isn't just like pullback within a bullish trend behavior. This could potentially be a trend reversal. The Dow Jones still looking pretty solid on a relative basis, but we also did break inside of this monthly value area. And our ARK Innovation ETF, led by Tesla, finished back inside of this monthly value area, and we're just a smidge above this monthly point of control at 35.61. And remember, the conditions that really allowed the market to rally so much off the lows was a weaker dollar and stronger treasuries. And for today's session, we got a pullback in this 10-year treasury future, and we're trading back inside of the monthly value area. It's not like all is lost. It's not like the trend has completely broken down, but this was one of the reasons why I wasn't really looking for the market to just have an intraday rebound. And our dollar index finished off the day with a pretty nice green candle. The trend here still looks like it is to the downside, but again, when the dollar is rallying and treasuries are selling off, that's definitely not conducive to adding new positions and getting stubborn. Over the weekend, we sent out our Pristine Capital weekend market analysis video to all of our subscribers, and we noted the poor risk reward dynamics for the markets heading into this week. And for that reason, we were really just mentally prepared that if the market shows any sign of weakness, just get out of Dodge and reduce exposure. That's exactly what we did today. Over the past couple of weeks, we had some beautiful trades that hit their R2, R3, and even R4 pivots. So any further upside was really just gravy. I added some additional trades into the end of the week, just in case the market kept moving to the upside, and I very quickly hit out of these. We closed out our Coinbase common shares for a small winner, $47.21. We had paid $46.33. And you can see right here, reducing exposure given the flip in the trend model. And that's something that we share in real time in our Discord with Pristine Capital members. And you can see all of these exits occurred right in the morning, with the latest one happening at 9:53 a.m. So this was not a situation where I was like clinging on to the positions, like, holding on for dear life. It was just like, hey, we're heading into Christmas. Like, any further upside is gravy. I'd rather make the mistake of closing out a position and it keeps going up than hold a bunch of positions for a max loss. And I would have to imagine most players on Wall Street are kind of in the same boat. Like, who's really trying to gun it out into New Year's and make even more money after a 17% rally in the market? Now, that said, my trend model's at a -1. That does not mean that now I'm just flipping into a perma bear and, oh, the market has to go down and let me start, posting these bearish macro charts and scaring everyone. I want to make sure that I'm prepared for any scenario. I would love for the market to keep moving higher into the end of the year. So that is why, now that I've raised a bunch of cash, I am scanning the market and really looking for the high relative strength names. So let's dive into a couple of those charts that we found. The first one was on our Pristine Capital weekend watch list. This company's called Mobileye, and it's a recent IPO, and it showed some nice relative strength today. This one was green for most of the session and ended up closing a smidge in the red. Next name that could have high potential if the market decides to resolve to the upside is HRMY. This stock was putting in a really good candle today, and it appeared that we were going to have a breakout, but this one likely sold off due to some overall weakness in the market. Next is Amcor Technology, ticker symbol AMKR. This name got incredibly extended, trades at a low PE ratio, only half that of the S&P 500, and we are now catching down to that 20-day simple moving average and working off those overbought conditions. And LSCC, Lattice Semiconductor, this stock has been riding that 10-day EMA, and the 20-day simple moving average is slowly but surely catching up to price. Heading into tomorrow's session, our process is basically just telling us to sit tight and wait for an entry signal. As of right now, there's no signal to re-enter the market, and that is when I specifically could really hurt myself if I sit and stare at the price action all day. So a lot of times those are the days where it's good to just get off the desk, maybe do some holiday shopping, maybe go for a workout, and not really fret over the market until you get another signal. I think that's the hardest thing to do in trading, but that ability to just kind of sit on your hands and wait for a premium setup is what separates the winning traders from the losing traders over time. Hope this video helped you with your preparation for tomorrow's session. Make sure you like the video, subscribe to the channel, that way you don't miss any future videos, and we'll see you all next time.